Here we have the hourly price chart for Gamestop Corporation, stock ticker GME. For this video, we're going to pull out a bit here, take a step back, and take a broader assessment of what's going on with this stock, given the fact that we've seen some fairly major declines here recently. At this stage, the major event here is the fact that we have crossed below this $20 level. This is something that I've been speaking about here for a while. It's not entirely surprising that we are seeing share prices move to this price zone. And the fact that we have broken below this $20 mark is quite significant on a psychological basis. As things currently stand, the price lows come in below 1880, which marks the trading low from August 5th. And currently we are moving into resistance zones that can be found near the 20-period exponential moving average on the hourly chart. This is a very significant development because it does suggest that the 20-hour exponential moving average is now containing prices and preventing prices from making a strong breakout back above the $20 handle. As things currently stand, we are seeing a price gap that has formed at the downside. However, this gap has already been filled, so it's unlikely to propel prices much further to the top side. Indicator readings on this price chart are starting to roll over out of oversold territory, so this is a positive for the stock. However, we will need to see a more sustainable break above this $20 level in order to continue to expect share prices to move higher. As things currently stand, the share price is facing a series of resistance levels that can be found at all four of the major exponential moving averages. Here we can see that in order for the stock to break back above its exponential moving average cluster, we would need to see a break back above the 2390 level, which marks the 200-hour exponential moving average on this price chart. From there, the next level to the top side comes in at roughly 2560, which is the 61.8% Fibonacci retracement of this declining move lower. As we can see here, this does mean that the stock has a fair amount of distance to cover in order to regain a bullish perspective and a bullish outlook going forward. If we move down to the 30-minute chart, we can see the price gap here a bit closer, but as we can see, this price gap has now already been filled. In most cases, you would expect to see a downside price gap to be refilled to the top side. However, this has already happened. So any further upward momentum that would be expected to be generated by this type of event has already completed itself. At the moment, we're starting to roll over at some resistance levels that can be found at the 50-period exponential moving average on the 30-minute chart, and the indicator reading has moved toward the midpoint of its histogram. Overall, this does suggest that upside from here could be limited and that we could start to see prices roll back over and retest the bottom of this recent trading range. One other point that I should mention here is the fact that I have been comparing GameStop stock with AMC stock and trying to understand the relative performance of both of these names in conjunction with one another. In many cases, AMC stock has managed to outperform even in situations where GameStop stock has been declining. These are interesting names to compare with one another because many of the same demographic, many of the same retail investing market is focused on these stocks as a collection. As we can see here, one of the main points that I've been making is the fact that the potential for decline in AMC has been much less than the potential for decline in GameStop. This is largely due to the fact that most of the meme stock excitement, let's call it that, enthusiasm, let's call it that, has been centered on GameStop specifically, and this is generally where most of the order flow tends to begin. Once we see order flows increase in GameStop, some of these other external peripheral names do start to benefit from the overall bullish activity. But what is most important to note here is the fact that the potential for downside in AMC is much more limited. With share prices trading at roughly $4.50 to $5.50 for the most part within a trading range, the potential for declines has been much lower for those trading in AMC stocks specifically. As a result, the development of an exit strategy for AMC might be a bit easier than it is for those that are currently trading in GameStop stock. All of that said, if we do look at the recent moves higher, we can see that there has been some agreement here with these stocks moving in conjunction with one another. Ever since AMC has posted its lows of, this would be 441 during the August 5th trading session, we have seen some similar movements in GameStop that have occurred at roughly the same period of time. For these reasons, it's not a bad idea for traders to compare these two charts and to monitor developments either upward or downward in both of these names, so that traders can get a better idea of the upcoming directional movements that can be found in each stock. Currently, the range highs that I'm looking for in AMC come in at 575, whereas these range lows come in at roughly 440. Finally, we really need to take a step back here and look at the much longer term viewpoint because we have broken through some fairly significant support zones in near term. This does start to change the trajectory here, and it does start to change the outlook for how people are most likely to start trading this stock going forward. So specifically, when we look at the prior short squeeze event, we can see that share price action did have a much larger ripple effect, or aftershock effect type of effect that did occur for quite a while after this initial short squeeze really occurred. These later price movements do not show the same type of activity, as we can see here. Overall, these price movements have been much shorter in nature and much less influential in terms of the ripple effects that are really generated by the initial price movements. In addition to that, we can see that the sequence of highs in this case has been much lower in terms of elevation. This does suggest that share prices could continue to move lower and produce lower lows in the process. If this does turn out to be the case, what we really need to be looking at here is this prior price low, which comes in at 1030. As we can see here, this is the ultimate price movement that did ultimately lead to this generation higher in share prices, but this is essentially where we were before this second short squeeze happened. If we're going to assume that this second short squeeze has now run its course, this does suggest that a retest of this level is imminent. Other markets have given way at this $20 price level, this very important price handle. We can see that the overall sentiment reading has shifted into the negative direction. Currently, the reading in the momentum indicator is trading near relatively mid levels, and this does suggest that share prices could continue to move quite a bit lower before becoming oversold. With all of this in mind, this 1030 level is looking much more likely than a rally back above the $30 mark. If this is true, and if this bearish outlook is the correct way of viewing current price action, this would suggest that we have much further room to extend to the downside, and that any movements to the top side will be quite limited from here. For these reasons, GameStop investors do need to start thinking about a potential exit strategy in the event that share prices continue to move lower. If we do not have any substantive evidence which suggests that share price short squeeze activity is likely to occur going forward, the downside is the next most likely movement. As a result, a breakthrough the 1750 level will now target a move into the lower 10s, and this does suggest that the balance of the evidence is focused on the bearish direction. Here's the current market outlook for GameStop Corporation, stock ticker GME. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.